I'm going to tell you 4 things about the economy in 8 minutes. This involves electric vehicles, all these bank failures you're hearing about, gold, and of course interest rates. And remember that it helps you and I both if you click like on this video. This is from CNN. The Federal Reserve said Wednesday it is holding interest rates at their current levels for the 6th straight meeting. Okay, here's the part I really need you to hear. Listen to this. Jerome Powell said a persistently strong economy, coupled with inflation continuing to stall, would simply result in the Fed holding off on cutting rates. But added that an unexpected weakening in the labor market could speed up the timing of the first rate cut. Think of that. They don't even understand the way that I've been showing you how it works. When they start lowering rates, that's around when the recession always begins. Sometimes rates start falling first and then the recession. Sometimes the recession starts and that's when the rates start falling. But either way, it's always closely tied in almost every situation. As soon as they begin to lower rates, that's when the recession begins, and that's when you'll start to see a lot of taxing on employment. Unemployment will, of course, rise at that point during the recession. So what they're saying is if there's a rise in unemployment, they'll consider lowering rates. But there won't be a rise in unemployment until they lower rates and we enter the recession. Of course, we have to talk about gold. And you guys remember, think about this. I'm going to ask you a question. What do you think it was? Think back when gold finally broke through $2,000 an ounce. Never to look back, in my opinion. And I don't think it'll drop below that ever again. Think about when that was. That was only 2 months ago. Here's a chart of gold. There's where it broke through 2,000 for the last time, and now it's at $2,300, and it was even higher than that. And what did I tell you about all that? There's all these mining companies that are digging the gold out of the ground, and they're the same cost structure to get that gold out. They're just now making hundreds and hundreds of dollars more in profit. And they don't really get the benefit of that until they officially release it to the public by showing them in the quarterly financial results. Look how much better we're doing. I told you that those quarterly results were going to be arriving. It's earnings season, and all of a sudden all these mining companies are saying, oh, we are making a lot more money than expected, and we're making a lot more money than previously. And that applies to every precious metals miner. And this is just the beginning of that because it wasn't for the entire period that the prices were so much higher. The big one will be the next quarterly results, where all these mining companies will say, wow, we made all that money during that time at such higher prices for such a long time. The place to be is in gold mining companies. I've been harping on this as long as you've known me. So what happened? Here's a screenshot of what happened to Newmont Mining when they came out with their earnings that blew away expectations and are pointing to a lot higher prices to come. They beat expectations and increased 12% that day. After having already increased the day before, they're going to keep on going higher. Here's a screenshot of the 10 largest gold mining companies. It'll show you their revenues per year and also their market capitalization. I recognize this is a couple of years old, but it's still pretty much the same now. You know of all the defaults and delinquencies and bankruptcies I've been telling you are going to be coming in this big default deluge? That's different than we're going to talk about with the banks. You're hearing a lot of the banks are in trouble and they're going to go under and things like that. I'm going to tell you exactly what's going on here, show you it's not as bad as you're being told. This is a screenshot from bank failures since 2009, and you'll notice that 2020 and 2021 both have no bank failures, which is, I'll call it extremely rare, but I can only imagine that's because a lot of the banks at that time were living off of bailouts and handouts. And one more for you, here's a number from Bankrate. This is a list of failed banks from 2023. You know most of these. Silicon Valley Bank, Citizens Bank, Signature Bank, First Republic, and Heartland Tri-State. You've heard about all of these in the media. So there's 5 that year. But consulting firm Claros Group analyzed about 4,000 U.S. banks and found 282 banks faced the dual threat of commercial real estate loans and potential losses tied to higher interest rates. Think of that. Because a lot of these companies own office buildings that are rented out to a lot of tenants, and they own these buildings not clear. They own these buildings based on taking on leverage. Now they're paying more for the interest on their loans, and their office buildings are sometimes as low as half full. This is a problem, but again, only for, as Claros Group says, 282 banks. But before we get into the good part about the electric vehicles that you absolutely need to see, I got to tell you one more thing about the problems with the banks. This is a screenshot of the number of FDIC insured institutions on the problem list. And you'll notice this chart starts in 2012, where they had 651 institutions on the problem list. And it dropped every year all the way down to where it is now, which is 39. This is according to Noranda Real Estate Investments. And I just want to say that all of this will all change if there's a recession. We get into some economic hard times, then it's going to affect all of this and it'll make the numbers a lot worse suddenly. But right now the trend is really positive, even though you're being told that everything's falling from the sky or whatever. It's under control right now. In the grand scheme of things, historically, we can handle these levels. Tesla has abruptly fired the team running its electric vehicle charging business, raising doubts about the future of the largest U.S. charging networks. The move also blindsided other car makers such as General Motors and Ford, which planned to use the network. Still, experts say the EV market is not collapsing, but rather entering a new phase in which consumers are demanding more affordable models. Worldwide sales of plug-in vehicles will rise around 20% this year compared to 2023, according to a report from the International Energy Agency. So you see the tides of all things are moving around in the electric vehicle market. But I put out something on the weekend about exactly this. It's about Blink Charging, one of the companies that we picked in the past, but also how it's an opportunity right now. We posted this on April 28th, top opportunities, time sensitive. We talked about a major opportunity in Sirius satellite radio, which is still all playing out exactly perfectly, and then Blink Charging. Said things like deeply discounted levels, but listen to this. Recent public opinion among most, certainly not all, investors has recently skewed negative towards electric vehicles. As a company engaged with charging stations, Blink was certainly not immune to the downfall. I also wrote in the special opportunity alert, EVs are not going away. If you have one, you will still need to charge it. Current issues such as poor battery life in cold weather, negative, not positive, notably, negative environmental impact, range and charging issues, etc., are all fixable and will be addressed. Here's a chart, 2 years of Blink. Look at the trading volume underneath there, okay? This is one of the things that we watch even more than the price. But when we put out this time-sensitive alert, it was trading at $2.42, and now it's at $2.89. That's 47 cents higher, almost 20% in a matter of 5 days. At current prices, we're looking at a quadruple bottom. Shares, along with the entire EV industry, want to go lower. But, as evidenced by the excessive trading activity, prospective shareholders are piling in at rates many times greater than a few months ago. Now here's a 2-month chart of Blink. The ticker symbol, by the way, is BLNK. And if I wasn't clear where all this content's coming from, was an alert I put out on Sunday. Look at that candle. See how it's closed off at the top there? And the markets are about to open in 29 minutes. When it's cut off at the top like that, that's a very bullish sign because it closed at the highest price of the day. Now look at the near-term trading volume sloping higher like that. That's incredibly strong in terms of the momentum. This is all a very bullish setup, and it will change when the markets open, as I told you. But right now, this is implying the probability, not the certainty, but the probability is for shares to go higher in the near term and higher in the long term. The Peter Leeds newsletter is one of the most popular financial publications of all time. And we keep an eye on all the things for the newsletter. We keep an eye on it for you as well, and we talk about it in these videos. So please subscribe, and we're going to keep an eye on macroeconomic events, stock market, everything that's going on in the economy. So please subscribe to the channel, and remember that it helps both you and I if you click like on this video.